Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I've got two paper money trades on two high-profile names for you. Remember, we're going to remind you of the earnings events in both of these names while we give them to you. First and foremost, let's get to Nvidia. Now, Nvidia, our first paper money trade of the day, has got earnings not till May, the end of May. So you've still got time in Nvidia for that earnings event. So we're going to look at something that stays ahead of that earnings event. So I went out to the May 2nd expiration, bought the 108 call, which is basically right at the money, then looked at the expected move for next week. Remember, only 6 days between now because of the holiday next week. Looked at the move about $10. So I went in and sold next week's 118 call. So the 108, 118 call, May 2nd, April 17th. The debit on that, we put it in around 660, trading about 635, 640 now. So slightly lower than where we put it in. Again, this is a move if you were thinking a bullish posture in a stock like Nvidia. It targets the 118 strike, $10 higher from where we are right now. The risk on the trade is whatever the debit is you pay, that is the risk. And if you notice, the May 2nd to April 17th is a 2-week spread. There is an opportunity to extend duration into that April 25th week and reduce the net debit, therefore reducing the break even on that spread. But gives you about 36.5 deltas. It is buying the 108 in May 2nd, selling the 118 in April 17. So, like I said, trading around $6.30. That's the risk. And the target on this trade is 118. Now, we'll look at our second trade of the day, and that is META Platforms. Very similar trade and structure, but different dates. May 9th is the date we're buying. By the way, let's give you a quick update on META Platforms. Their earnings date is April 30th. A little bit different. What does that mean? That's why we're structuring this trade where we're buying after the earnings event and then selling before. That's why this is a little bit of a different, this is a 3-week spread. Buying the May 9th 540 call, selling the April 17th 570 call, so a $30 call diagonal. Now, implied volatilities will be slightly higher on this. The debit will be bigger because you're 3 weeks in between. And remember, you can extend duration on this trade, but we're buying the May 9th 540 call, selling the April 17th 570 call. We put that in around 32.15. It's probably lower than that now. Yeah, it's below $30. It's trading closer to $29 now. META has eased back here with the rest of the market mid-morning. So if you spend, let's say, $29 even for this spread, that's the risk on the trade. You've got time to extend duration. One of those durations may be into the earnings event. I want to say something real quick about this. The META Platforms, yes, that is a verified earnings date of April 30th. So we went past it to buy our longs. That will allow us to extend duration into the earnings date. So $29 is the net debit where it's trading right now. That's the risk on this trade. Buying the 540 in May 9th, selling the 570 in April 17th. Again, this is a bullish posture, giving you about 30 deltas, and the risk on the trade is the debit paid. That's our show for today. Have a great weekend. We'll see you next week with another edition of The Daily Trader. I'm Kevin Hincks.